So you've got these hot stocks. They're the stocks that make really big gains in a relatively short amount of time. Well, most of these stocks tend to be small cap stocks, low priced without many shares outstanding. And there's some things you need to know about trading these types of stocks. And that's what I'm going to cover in this week's video. Plus, I'll do my normal market analysis and then we'll look at the trade of the week. But let's start off with the hot stock discussion. So when we think about the stocks like this one, which have made really massive gains in a relatively short amount of time, you see here XCUR went from $3 to $18 in just a little over a week. And the thing is, this stock has very few shares outstanding, just about 1 million shares in the float, a little over 1 million shares in the float. What that means is that the public is only able to trade about 1 million shares of this stock. Well, if there's some catalyst that can bring in a lot of buyers and you've got millions of shares of buying coming into the stock with only 1 million shares available to buy, you can get a stock that makes a dramatic gain. And that's the first thing about these hot small cap stocks that you need to understand. And that is, stocks with a low float have the best potential to make a big gain. Now, the second thing is they almost always start their abnormal move to the upside with abnormal volume. That is strong price gain with strong volume. And you can see here again on this chart how the stock on the 18th of November starts trading much more volume than normal and made a substantial price jump. Now, it's hard to tell on this chart because the scale is so skewed by the gains that the stock made, but you can see that in one day it went from 3 to 375 right in the opening hour, and then from there started to really move. Now, the other thing you need to understand is that most of these stocks, weeks or months down the road, are not going to be performing very well. They tend to go up very quickly and then also come down very quickly. And so the key thing that you have to remember with these stocks is to not believe in the story, because the story is often hyped up. We've often heard of these terms like pump and dump. They're stocks that go up very quickly because of the emotional bias in the market. The buyers are very aggressive. There's not a lot of shares outstanding, and that brings out the fear of missing out among many traders, and that causes these stocks to go up fast and then come right down again. And so it's key to not chase strength, but instead either buy the surprises on the chart or the breaks of the pullback. We don't want to believe the story, we want to trade the chart. So here's an example of another stock that's done quite well. And this happened, or started to happen, on November the 6th, when the stock started to behave abnormally with abnormal volume. All right, so that was the surprise. If you're being a buyer up here, that means you're chasing the FOMO, you're chasing the fear of missing out. And look what happened the following day. It dropped from $1 all the way back down to 50 cents at the open. But when these stocks break their pullbacks, like it did right there, then there's another opportunity. Do not be a buyer up here. Wait for the pullback and then consider the break of the pullback. Do not be a buyer up here. Wait for the pullback, and then when it breaks the pullback, you can get a run higher again. Now, once the tops start falling on the chart like this, that's when the story's over. You just want to let them go until they start to build rising bottoms again. So if this stock, starts to build a rising bottom from here, then it would be worth considering again. But until that happens, we want to stay clear. All right, well, let's get into this week's market analysis. We're going to start with the S&P 500. Here is the chart of the S&P 500. You can see that the trend is up. We've got this general upward bias, so the buyers are in control, and that is a good thing if you are in the stock market. If we switch to the shorter term chart, what we'll see is that there's been quite a bit of volatility around the election. You had the big ramp up when Trump won, and then you had the profit taking, and then this week we broke the downward profit taking phase and are starting to move up again. So that's a bullish signal, but all of this volatility indicates uncertainty. So we want to be a little cautious with that. Let's jump to the 3-year chart. There you can see the trend is up, so the buyers are in control. All right, let's take a look now at the NASDAQ 100. QQQ is the symbol. And there again, you can see on the daily chart we are in an upward trend, but on that short-term chart, the 2-hour chart here, we see just lots of volatility. The trend is generally up, But with all that volatility, it heightens the potential for a pullback and the potential to get whipsawed out of your position. So you have to really focus in on those lower price stocks because they will have less correlation to the market. All right, let's take a look at the small cap stocks, which did very well this past week. And I think that's where the opportunity is. You can see the nice gains that the small caps made. Still, as I said with the other markets, lots of volatility, and that means uncertainty. We probably will see the small caps get stuck at resistance. So perhaps Monday pull back. Remember, it's going to be a quiet week this week because of the Thanksgiving holiday on Thursday. And so that'll mean volume drops off. Thursday, the markets are closed. Friday, they close early. And so expect maybe a strong start to the week and then a little bit of a fade as the week progresses. Let's take a look at the Canadian markets, which of course will be open all week because Canada has its Thanksgiving earlier. The trend is up, very strong upward trend. We're running away from the trend line a little bit, so getting a little overbought, but still a strong market. And you can see there on the weekly looking stronger than the US markets. And a big reason for that is the performance of gold. Now, gold had some profit taking right here, and this presents a very important lesson. If I draw a trend line across these lows like that, you can see that price ran away from the trend line. And when that happens, it typically has price come back to the trend line. You've heard me talk about that before many times. So we run away from the trend line, we're overbought, we come back to the trend line, we bounce off of the trend line early this week, and that starts the resumption of the trend. Now, I expect that there's a good chance we will see gold get stuck at its all-time highs, come up into here, pull back, and then perhaps build a little pattern. Or it could be the point where the market starts to reverse. We do not know yet. I think the bullish trend is still intact, but we want to be a little cautious because it's getting pretty extended to the upside. Let's take a look at USO, and here we have a little bit of buyer support this past week. The oil market's been very choppy, generally trending downward, which isn't fantastic if you're in the oil market, and that's why it's been really a market to avoid. It's not necessarily bad, it's just lacking trend, lacking buyer enthusiasm, so you want to be careful with that. Finally, let's take a look at the currency markets. UUP is the US dollar, very strong as money goes to the safety of the US dollar with political events around the world getting a little heated. And I think that's also due to the fact that the bond market in the US really fails to go up, and that means interest rates still strong in the US. Let's take a look at Bitcoin. I'm going to take a look at IBIT. Someone recommended that this is a better indication of Bitcoin strength, and you can see the strength there. If we look at the 3-year chart, we've got that long-term breakout through resistance from optimism, breaking out 3 weeks ago. I've been bullish the last number of weeks because of that, and you can see that the buyers are in control. It remains a good place to be. However, what I would caution is that it's a little bit of a chase here. Don't chase the strength. Wait for the pullback. So we have a market that runs away like this, wait for the pullback and buy the break of the pullback. Do not be a chaser, a FOMO trader. That's a dangerous thing to do. Finally, TLT is the bond market. You can see that it's still in this downward trend. That means interest rates remain high in the US bond market. It is starting to stabilize, and we're near some support here from earlier lows. And so we should see the market bounce off of this, but it hasn't done so yet. You can see the Stockscores are at pretty low places right there. And just a reminder, while we're on the Stockscores website, if you go to the homepage, you'll see here on the homepage a link to start your free Stockscores membership. I send out an email every week with my trading tips and comments and general lessons on trading, and that's free to anyone that registers. So go to stockscores.com to do that. All right, let's get into our scorings or our ratings then for the market. US large cap, NASDAQ small cap. I've got a neutral rating in the short term just because of that volatility, but the long-term trend is still bullish. Now, the Canadian market looking a little better in the short term, so bullish on both time frames there. Gold and oil, neutral on both time frames. US dollar, bullish on both time frames. Bitcoin, bullish. Bonds, still bearish in the short term, but neutral in the long term. All right, let's get to the trade of the week. This is an example of one of those small cap stocks that did really well, and we can look at the entry points on Friday using a much shorter term time frame. This is the 2-minute or 1-minute chart, sorry. And what you can see is that this stock started to behave abnormally early in the day, not at the open. It really started to gain its volume after 10 o'clock. Now, I don't want to chase the strength here. That's a bad idea. I want to wait for the pullback, and then the break of the pullback. And here's another one, pullback, break of the pullback. And you see all of these pink and yellow dots. Those are abnormal candles. What that means is that the price gain and the volume on those 1 minute candles was abnormal. And that's a sign that the buyers are coming in aggressively, and it marks a bottoming point. So anytime you have an inflection point, you can draw a little line of support there. And that's a good way to define your stop loss point. So if you buy this break right here, which is a nice pattern break, your support is at the low of that, what we call an inflection point. So this low point before the stock starts to go up, that's where you put your stop. And then you make a new one, okay, you can raise your stop. Make a new one, raise your stop. Make a new one, raise your stop. Make a new one, raise your stop. And then you get stopped out on that trade right at the end of the day. But having bought it either here or here, you've got a nice gain from 350 to 450 in the span of just a few hours. So that's the kind of trades we love and the kind of trades we cover in my Stockscores active live service, which you can learn more about at stockscores.com. All right, well, I hope you've enjoyed this week's video. If so, click the like button. Make sure you're subscribed to the channel, and as always, trade well.